got Mr. Sunil Chari, co-founder and managing director of Rossari Biotech Limited, joining us on the show to try and decode their earnings and, more importantly, what the outlook for the remainder of the financial year is. Mr. Chari, hi, good morning. Thank you for your time. Good to be speaking with you as always. And, before I decode your numbers and get a sense on what the outlook is, I just want to try and understand the outlook that you've shared on the revenue front. Your quarter 1 numbers show strong growth. Your revenue was up 28% this quarter, but you've maintained your full year growth guidance at just 15%. What's making you cautious about the rest of the year? Are we looking at any sort of quarterly moderation on the top line year on?
Good morning. The first quarter has been a great quarter for us. New capacities have come online. Our expansion was, done in the right way. After the IPO, this was the first expansion which we did in the last few quarters. They are now, we will slowly ramp up. The markets look volatile, uncertain, and that is the reason why we are not committing to any figures and committing to a 15% growth. But we are confident that we should do better than what we guide.
Right, Mr. Chari. Meryl D'Souza here, also joining in on this conversation. Speaking further about your numbers, sir, EBITDA margin has come in lower at 11.6%, and you've stated that this is the new baseline and you still expect margins to move above 15%, but over the next couple of years. Can you help us with what's the roadmap to get there? And can you just explain about what saw this margin pressure in the quarter?
So the freight were very, volatile again, and we lost a lot of extra money on freight for contracts which we had already got into. Raw material volatility also played a very big play. And as I said, in the earnings call yesterday, there was one commodity, where we lost about 5 crore rupees extra because the incoming material got delayed and we had to buy at higher price materials. But I think 80 crore EBITDA, which is the highest ever EBITDA, 697 crore sale, which is the highest ever sale. And now, as we try to hive off divisions which are low margins or not, getting into fitting into our strategy, the losses in the consumer business is hitting us. And that is where we have about 4.5 crores losses there. That is where we need to do a sale. And this sale will help us also, we are about 250 crores debt, and this should, come down substantially in the next 18 months. And the expansion in Saudi Arabia is the pre-operative expenses also are there in the balance sheet. So I think overall, the focus on capital allocation, focus on market, focus on areas where we can get higher margins, and having of the subsidiaries which are not doing well. These are key for us to return to the 15% plus margins.
Okay, understood. So that's your roadmap and we'll be following that very closely. Mr. Chari, let's talk about your business segments. Your home and personal care and that chemical segment, HPPC, still contributes nearly 80% of your revenue. Can you give us a sense in terms of what the product mix, or rather your segment mix, is going to look like going ahead? And what kind of contribution can we expect to see from TSC and the AHN segments over the next few years?
You see, the last financial year, we grew practically 20% plus in all the three segments. And the HPPC continues to grow well. And with our new Saudi Arabian plants, which we are still in the final stages of finalization, we should see HPPC ramp up to 90%. But the animals and nutrition, the textile specialty chemicals will continue to grow. We have invested in fiber chemicals, which will pay off, in this year, in the next financial year. In the vitamin premixes, enzyme premixes, and trace minerals, this is something which is there. We have sold our 2 offices, Unitop and Rossari, and this has helped us, now gain momentum in terms of sales, but also in 4 years, that is our plan, that we double our sales in 4 years, double our profits in 4 years.
Right, Mr. Chari, understood. You mentioned that Saudi Arabia, and I am gathering that this continues to be a strategic priority for the company, but you have only made exploratory investments so far, and you did mention that you're in the final stage. So when do you see yourself committing meaningful capital there? And as investors, what are the milestones or triggers that we need to be watching out for before you take that next step?
We are in the final stages, so we cannot count the chickens till they are hatched. So we would try to do it as early as possible, but it will be definitely in the near future. We will make some announcements once we are ready.
Mr. Chari, just wanted to clarify, you did say doubling of profits for the next 4 years. Is that right? Did I get that correct?
Yes, we are on track and to double our profits in the next 4 years.
Okay, sounds good over there. Let's also talk about your capacities. You've commissioned the new blending facility in Thailand. How quickly do you expect utilization to ramp up? And what kind of revenue contribution are you expecting from Southeast Asia in the next couple of years? And I'm asking this because in India, at least as far as I'm aware, you're not planning any major India capex, right? So can you talk to us about what the overall capex outlook is and what that will do to your capacity?
If you see our exports, they have been highest ever again. We have grown year on year exports. Exports contribute about 24% of our sales. And this is where we want to ramp up and we want to increase our exports in the near future. If you see, analyze our last year's export, our major exports was to the Americas and the Europe markets. Gulf and the Southeast Asia was comparatively lesser. And there is where we wanted to focus. The Thailand investment is very small. We did about 10-15 crore rupees investment in Thailand. And we do not expect big sales there, but this will help us as a service point, getting into the customers, doing sampling. And also the ROC, our focus is that, we grow from this 14-15% ROC to 20% ROC. All these are steps which we are taking to increase our return on capital employed.
Right, Mr. Chari. Another thing that I want to touch upon is that you've highlighted ethylene oxide availability as a key constraint going up to FY28. Can you help us quantify how much that business is actually holding back on your company today? And just any timeline that you can give based on quantifiable guidance up until FY28 when the situation improves?
See, we did a 15,000 tons expansion in ethylene oxide, consumption for the MDA plant. And I think this will ramp up in the next 3-4 quarters. We are expecting more ethylene oxide from Reliance from December onwards. That is what which we have seen from the internal news from Reliance. And once this comes in, this 15,000 tons extra will add. Now we are running at 100% capacity utilization in ethoxylation. And whatever expansion which we have done in non-EO has contributed to the good sales, which is 28% year-on-year increase in sales. We expect for the year 27-28 to be very strong with our ethoxylation capabilities.
Okay, so you do expect to see improvement by the year FY27 and 28 when it comes to your ethylene oxide situation. Thank you so much, Mr. Chari, for taking out the time to speaking with us today. It was a pleasure to have this conversation.
Thank you so much. Have a nice day.